So it's your AkwaFx here again. Today, I'm going to be taking you guys step by step on how you can trade Trendline, how to implement everything. There is how you trade a setup, you have a bigger RR. And there is how you trade a setup, you have 1:1, 1:2 RR. So that is when psychology come in. That is why waiting comes in. When they tell you that 80% of the time it's for you to wait for the market, 10% could be your strategy and 10% can be, let me say, 20% stop loss. So therefore, I'm going to show you how you can trade trend line as a beginner for a better and large profit. For a bigger RR, how you can implement this step by step. I'm going to show you that without hiding anything from you. So at your end, the only thing you have to do for me is to subscribe to this channel, turn on notification bell for more tutorial videos like this to come. I take my time to explain everything step by step. So if you're already a subscriber, thanks for watching and stay tuned for more tutorial videos to come. So let us get straight to the chart and show you how you can implement everything step by step. So for us to trade this trend line strategy effectively as a beginner, you have to go to your bigger time frame. That could be your daily or H4. But for this tutorial, I'm going to be making use of H4. Right here, I'm on AUD USD. So first, we have to mark our trend line. Trend line, for you to get your own trend line, you have to make sure that there are touches. It touches several times. So let's check where the market touches different times. The market will come and touch, break above touch, breaks above touch. So for you to draw your trend line, you have to pick a tool. You draw the trend line, like trend line is an acceleration. It has to accelerate to the upside. Something like this. It has to be like this. Your trend line has to come like this to the upside. So the only thing you will do is for you to pick your trend line tool. You mark it from this zone. You have to make sure that you connect it. You connect the touches to the upside. So for you to connect the touch, we have one touch right there, we have two touch, we have third touch. They always say during the third touch, this market will break down. The market may come back and touch like 3 good times and then it broke down. So the market come back and touch again right here. It rises back up, it fell to touch and it breaks down. So once this happens, you have to wait for the market to do something like this, back from where it comes from, where the touches happen. Then once that happens, you may look for your entry at this zone. You take this market down, take this market down. Upon you taking this market down, you have to make sure that this market comes back in. Your TP has to be around this zone, or you look below. If there is where an imbalance was, that will be your TP. So at this point, the way this market happened, this edge here will become your entry. Why did this edge becomes your entry? That is because it broken structure to the upside. So if you scale it to the future, you see that that market was able to come into the zone and sell back down. So this is how you trade your trend line. So this is the bull scenario. So the bear scenario is you. Let's talk about the bear scenario. So the bear scenario, you've seen that this market is breaking structure to the downside. The market is breaking structure to the downside. So this is what you are going to observe during your sell scenario. You have to observe a trend line. The market has to trend down, and you are going to look for few touches on the market. As you can see, the market touches here. It touched once, touched twice. The third time this market trying to touch was here. But what happened, as it comes back down, it breaks above this zone. So upon that market breaking above that zone, you want it to come back and retest this very zone here that led to the breakout. Once it come and retest this zone, you are going to look for entry. You can go back to a smaller time frame for you to look for entry around this zone to take this trade back to the upside. That is to say, you're going to wait for the market to come into that zone. Once the market come into this zone right here, once this market come into this zone right here, it is for you to take the market back to the upside. So this is to say the bear scenario turned bullish. So this is how you trade your trend line, and this is how you treat it. So now let us go to the chart and let us see how we can implement everything on our real chart. So this same thing happened right here. We're seeing this market building line to the upside. This market was building trend line to the upside. You can see the market gives higher high, higher lows, and it keeps touching the line. But what happened? This market finally breaks structure to the downside. I marked this out, but I forgot to check this pair today. I've already marked this out. This is what happened. So the market was breaking structure to the upside right here. It broke structure to the upside right there. And what happened? This market come back and break structure again to the downside right here. Broken structure to the downside right here. So here now become where you wait for you to take your trade back to the downside. This zone will be your waiting point for you to take the market back to the upside. So as you can see right here, as this market come in touch, this was the first trend. As this market come in touch on the trend, you buy back up. It comes in again, the second, you buy back up. What happened the third time when this market come in, it breaks through it. It breaks structure to the downside. So this is to tell you that this market has started changing its direction from bull to bear. So once this happens, you will not be able to take a buy trade again. You have to slow down on your buy side. So what happened? As this market come into this trend line, it is for you to move down to your smaller time frame like M15 and look for entry. So let's do that together. As the market comes into this line too, as it touches, this was the second touch, you move down to a smaller time frame like M15 or M5 for you to look for an entry. Let's go to M5. What will be our entry criteria once we move to M5? That is what we are going to discuss about. So if you have watched up to this point, do not forget to subscribe. So therefore, on this channel, I'm able to drop many strategies, and I also try my best to make it easier for you to follow. So this doesn't mean that I trade all the strategies. No, as a trader, you cannot trade all strategies. You have to stick to one thing. So I personally, I stick to one thing. I have my own strategy, which I do use day by day to enter the market. So you cannot be trading everything or all the strategies on this platform. You have to pick one and make it your own. Or if you want to trade the way I trade with my proven strategy, you can hit me up with on the link which I will link on this video. If you want to join my VIP group, which is my signal group, you can as well check me out through this link, which I'll drop on this video. And also, if you want to join my free YouTube channel, my free Telegram channel, do well to use the link I will drop on this video too. So let's get straight to the point, because already I'm on my 5 minutes right now. So on my 5 minutes, you see that I was able to change from the trend line for it to become a zone. How did I do that? I have to mark from the open of this candle here. As you can see the open of this bearish, the close of this bearish candle, and the open of this green candle. So that was where I marked from, because here was the first line we draw. Here was the very first line which we drew, followed by this second line I just draw now for the zone to be our, for the trend line now to become our zone. So therefore, what I'll be looking at is for market to come inside the trend line for me to take a trade. But I will not take a trade blindly. I will not take a trade blindly on this zone. So I've already made this video. Before I know, my mic was off without my notice. After everything, I came to check on the video. Maybe I have to edit something. I noticed my mic was switched off. So therefore, as this market come into contact with this trend line, it's for you to look for a candlestick confirmation for you to take a trade to the upside. So now this place now become a zone. So as this market come into this zone, you look for a confirmation for you to take a trade to the upside. So how will you do that? As this market come into this zone, you see this candle here. This candle close inside this zone, and then it comes back up with a bullish candle, which happens to be this one. And now these two added up together, we call it an engulfing pattern. What is an engulfing pattern? An engulfing pattern can be a bullish continuation pattern, or it may be a reversal pattern. So we have bear and bullish pattern. So this very one here, it is a bear candle followed by a green candle. This happens to be our bullish pattern. This happens to be our bullish pattern. So upon this market giving us this engulfing candle, we place our trade right at this zone, at the close of that candle. And you can see this candle coming into this zone. This candle come into the candle and it buys back up. So you place your trade this way, you go 1:15. You place your trade, your stop loss come beneath the zone, and you go 1:15. You target 1:15. Your first target will be where this market come out from, which is this very leg right here, this high here. It's where you are going to target. That happens to be your first TP, and your second TP will be right, your 1:15 was right there. You close out with 1:15, thereby you using this. And if you are the type who use to move their stop loss, then you move your stop loss as well. How will you move your stop loss? As you enter this trade, after which you enter this trade, as this market close above this zone right here, it is for you to move your stop loss. You can see the market comes back and it closes above that zone with that candle. So after that, you can move your stop loss to below this candle that close above the high. You move your stop loss right there, and you keep on adding up to your position if that's what you want to do. So let's check out for another scenario. Do not forget to subscribe. Right again, this was the zone we marked. Yes, this was the zone we marked. You see this candle coming into this, you see the market coming into this zone. As the market comes into this zone, it gives you a bullish engulfing pattern. Like I said, bear candle followed by a bullish candle is what we call an engulfing pattern, and this pattern is a bullish pattern. So what happened? You look for the last bearish candle which leads to break of structure or to close above another candle to the upside. Because if that you check on your 3 minutes or 1 minute, you notice there was a break of structure, a gap of liquidity at this zone before this market. So after which you indicate your bearish engulfing pattern, which happens around here, your bullish engulfing pattern, sorry. After which you indicate your bullish engulfing pattern, which happens around this area, it is for you now to place your trade. So you place your trade right here. So here was your engulfing, your bullish engulfing, bear followed by this bear candle followed by this huge candle. It's your engulfing. So you place your trade right here. You place your trade right here. Take your long two. Place your trade right above that candle. Your stop loss can either come below the wick of the bear candle or to the wick of this one. So I'm going to use the bear of this candle. So I use the wick of the bear candle to place a trade, and I'm going to target my 1:15 again, and your 1:15 TP was hit right there. You keep moving. You see that the market come into this candle again. It comes into that line again. As the market comes into that line, it gives us engulfing, but this engulfing, it gives us this engulfing. This market gave us this engulfing candle right here. We have this one, but where are we going to place our stop loss? We don't see it, except we go below this line. That is only where the wick of this very candle, that is only where we can take our trade and place our stop loss. Then we see another pullback of a candle followed by engulfing pattern again. So as this happens, you can kindly place your trade around that level, and you go place your trade around that level. Your stop loss supposed to come beneath the bear candle, but in this time around, it is not that way. The reason is this inside bar, this doji that happened here, this hammer that is here is the problem, because you see the wick that grabbed the low of this bear candle. You shouldn't be overlooking. So you bring your stop loss below the low of that candle, and you go for your 1:15 or 1:10. So therefore, your 1:, like I said, you target the first high which the market come into, which is this one. This high right here will be your first TP, and you got your 1:6 right there. You move your stop loss to break even. Then you target your 1:15, your 1:15, and you can see this market did not make it up to 1:15, but you have already gotten your 1:6, which you move your stop loss to break even. And though you win two trade, 1:15, 1:15, that is 30 RR plus this one. It wasn't a losing trade though, but a break-even trade. So that is it for this tutorial. So if you have watched up to this point, do not forget to subscribe to this channel if you haven't done so. And if you are already a subscriber, thank you for watching, and stay tuned for more tutorial videos that will make you more money on this channel. So therefore, if you want to trade the way I trade with AkwaFx strategy, you can hit me up on the description of this video with a link I will drop. You can link me up on this channel. I drop a lot of strategies which you can work on one. You don't have to work with all the strategies like me. I'm using only one strategy to enter this market day by day, because you have to have a base and a rule-based trading strategy before you can survive in this market. So if you want to trade the way I do, kindly link me up, kindly chat me up using the link which I will drop on the description of this video. You want to join my free Telegram group, feel free to do so. If you want to join my VIP group, which is my signal group, feel free to do so. I remain AkwaFx as I sign out. Peace.